7 floor.
We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go.
Welcome to the nest. See you on the show.
Alrighty! The hack that shook the world. April 23rd, 2026. Welcome to the Tokenization Tower, The Nest, broadcasting live from the financial capital of the world. I'm in New York City. Robbie's down in Miami. We are lit.
Indeed we are. Great way to start off the show. Yeah, this hack just continues to make headlines.
It does.
How long do you think we're going to be talking about this hack on this show?
I mean, until these funds get unfrozen, right? And it doesn't look like it's going to happen anytime soon based on the lack of timeline from any of these protocols. We've seen multiple announcements, guys. We're going to talk about that today. We're going to talk about that with our guests. And we have a ton of tweets to cover and talk about live. We're here in the Nest, powered by Plume. Let's give them some love. Plume is powering the future of off-chain asset management on-chain. We're here in their office in New York. Today's topics, we got the Tokenization Tower, of course, markets and weather. We got Fiskantes, the CIO of Sigil Fund, who, Rob, I think you said, what, 5,000%?
327% higher since 2019. That is Sigil
2019.
Fund's core
What is that?
performance.
Is that a 60x?
I think it's a 500x.
500x. Wow. 6MV investor, that's Mike Dudas, and Predicate CEO joins. Our topics today are powered by our friends at Trezor. Use code Rollup10 at Trezor.io to get yourself a self-custody wallet that will save you from getting exploited. Guys, we have Fiskantes going to join this show. He's somewhere not in our time zone, so we are going to accommodate a bit of an early guest today, and then we're gonna get into the news after. I am pulling up the chat. Rob, it's good to have you back. How you doing, man?
Feels good, man. Just getting a little bit better every day. Don't want to miss too much here on the show. There's things that are happening. The Strait of Hormuz is open, then it's closed, and it's open again. The funds of who said the Strait of Layer Zero or the Layer Zero of Hormuz?
The Strait of Layer Zero is closed.
Yeah.
QM, have a quite-full day. IOB Khan, energy-based money is the future. How about proof of humanhood money being in the future? Shout out to WorldCoin and Tinder. Bang.
That is something I think we're going to see a lot more of. There's a lot of discrimination between agents and humans.
Is there?
There is. We're going to continue to hear more about that. Tempo got a shout out from Stripe on their Cheeky Pint podcast.
Yeah, and they're also powering DoorDash's
working with
new
DoorDash.
agentic. So I think the thesis there is there's going to be agentic payments done by agents on Tempo on DoorDash. Text your agent, they go order you some food on DoorDash. Maybe?
That's right. Yeah, I think that is how it's going to work. We're going to talk more about it. Why don't we get over to our first guest? We're going to speed run and get back to the news, back to the markets in just a bit. And so Fiskantes, I believe it's a 50x. I think I misspoke earlier, 500x.
I thought it was a 60x, 5,000%.
Just move the decimal places over. How do you get the 6?
Well, whenever you make a 100% gain, you move you 2x, right? Like you 2x.
Right. That's right.
So if you make a 200% move, that means you 3x your money.
Did you see RFK talking about how Trump calculates percentages?
Yeah, he said like 60% or...
He said, there's 2 ways to calculate percentages. Trump's got his own way. You discount a drug from $600 to $10, that's a reduction of 600%.
Yeah. 600% reduction. Guys, we've got Fiskantes, the CIO of Sigil Fund, a DeFi OG, friend of the show, and he is a partner at Z Prime Cap venture arm focused on early stage investments and a lot more there. Again, a 5,000% gain on his fund. He describes himself as a joker of all trades. Has a lot of insights on DeFi markets and more. Sigil has a strong track record. Their entire fund has been early to DeFi, early to a lot of investments. So I'd like to kind of separate this into, what is happening in the market today, and then what is he seeing for the future, investing in, these newer kind of like credit protocols or these newer DeFi applications, these more kind of like neo-finance setups as well. So without further ado, we're going to bring Fiskantes up into the show, get him joining us as our first guest of the day. And then we'll get into the news, guys. So let's bring him up.
And before we do, I think we're just getting him ready here in the back room. I see, and you put out a tweet about the N7 index, and I think we're going to be talking about neo finance with Fiskantes here in a moment. And
it's crushing.
Well, which token should we reduce? Which tokens should we add?
Yeah.
I mean, Sky is on a tear, I think, as a result of
Yeah.
some of the Aave shifting.
So
Aerodrome.
is Spark. Spark's on an absolute tear.
Spark is on a tear, and Aerodrome is on an absolute tear. And so
Yeah.
I think we're going to get to a point where we don't necessarily want to remove too many. Like, we might turn the N7 into an N8 or an N9 or an N10, because as more of these coins kind of wrap their heads around what the token model should be going forward, it feels like we're going to end up increasing the number of just tokens with a reasonable tokenomics out there.
Yes, there is something to be said about that. I could also see a case for like an N3 or an N5.
Call that the global TWAP.
But I do like the N, 10, 11, 12. Let's get Fiskantes up. Let's get this conversation started. This guy's a legend. Should be a fun conversation. Fiskantes, welcome to the show. Hope you're marked safe from the craziness of the last week, man.
Hello, everyone. Thanks. Yeah, we are safe. We are kind of good at dodging these things for some reason. I think it's mostly luck. But yeah, we dodge everything so far.
Better be lucky than good. I mean, you guys have been around since 2019. We were just saying on your according to your website, 5,000% gain since 2019. You have to be somewhat lucky and somewhat good at avoiding some of the pitfalls in crypto. There's been plenty over the years.
Well, indeed, yeah. I'm around a bit longer than that even, but yeah, the fund officially started counting our track record since 2019, and DeFi summer was the first sort of time period where we kind of made our first splash, and yeah, it was a blast.
Yeah, man, it was. I'm curious how you're reading the situation right now. We got so kind of like two parts here today. This, what's going on with these exploits, and then thinking about actually investing in the future of DeFi, what that looks like. On the exploit topic, when you're looking at, just what's happening, right? These large loopers on chain are facing serious negative yield right now due to excessively high borrow APYs on wrapped ETH on Aave. USDC and USDT pools, for the most part, across chains are also basically frozen, but they're not frozen. They're just kind of, there's no liquidity. What is your thoughts as to what's happening right now, whether it be from the state of DeFi, the state of this exploit, what's happening behind the scenes? We're hearing Aave's having a lot of conversations about getting loans to cover this loss. I'm just curious, right? You've been in this space for a long time. How are you reading this right now?
Well, it feels to me that DeFi is kind of failing to some extent. Like it held quite a lot of promise, and we were very bullish on DeFi since very early, and the early years were a lot of optimism, a lot of sort of sky's the limit upsides, and a lot of games, fun and games. But at some point, we need to grow up, and it kind of feels to me that DeFi is now in this weird space when it's not grown up yet, but it's not fun anymore, and it's just like something in the middle, and it's basically just this belly of that situation. And like, yeah, as you said, the loopers are the ones that have the most issues now with what's going on. And like, what even is looping, right? Why is it a thing that anyone should be doing? Of course you are trying to boost your yield, and it kind of makes sense economically, especially when the yields are so low, but it's not even useful to anyone else, right? It's not like providing any value to society. Like, I can get behind the base DeFi, DEXs, money markets, some perp DEXs, some other stuff, but like it kind of feels like a lot of these like sort of like new DeFi that we are dealing with now, it's not really that useful. It kind of got wrapped into itself too much instead of expanding into the world and like kind of making a difference. And it's quite honestly a bit disappointing and jarring, and I would expect at this point 2026 to already have more like adult solutions to some of these problems, more maybe circuit breakers, more sort of programmable features for wallets or DeFi protocols that kind of enable users to be more secure and to define their own risk. I don't know, like something in a line of, you know, like if it's programmable, if it's all on chain and permissionless, let's make it customizable so users can define their risk parameters better, or the protocol defines what are the end states that are useful and the end states that are malicious or potentially too risky, like looping or being able to withdraw all TVL with one transaction, right? It's obviously always an exploit, and we don't have any of these. Like nobody, I mean, not nobody, but there are not many builders now thinking about these things. It seems like everybody is just kind of stuck in the past, but without the fun and without the high yield. It's just like the past, but the only the sort of like the bad paradigms, the bad habits that we created in the gold rush era, and now we still have the bad habits, but the gold is not there anymore, right? So.
Yeah. You know, we have this this thesis called the neo-finance thesis. Part of this is that, you know, you have the on-chain developers that have been here when the gold rush was happening, and they're starting to get more, you know, institutional quality assets like RWAs. The other part is, you know, the institutions coming on-chain and starting to build out their own infrastructure, which I think is really what we can benefit from, is all of the compliance and the risk controls that, you know, some of these institutions, they have several hundred people in their risk and compliance departments. Unfortunately, now, you know, we're kind of scaring them off, right? With these exploits, they're going to be slower, but though that's really what we need. We need safer risk controls coming into the system. You know, also part of this neo-finance thesis is that, you know, decentralization is sort of it's sort of a concept, but it's not so much practical anymore. A lot of what we've seen, and, you know, some very controversial things, were kind of Arbitrum deciding to freeze the funds. We also, today, I saw Thorchain just let the funds pass through their network. I think 175 million out of the, you know, almost 300 million of the RS ETH just passed through Thorchain into Bitcoin untouched. Thorchain even made money. They made almost $1 million in fees as a result of the bridging from, you know, the RS ETH hack exploited funds over to Bitcoin. I mean, being in the space for so long, where do you stand on this? Do you think we should, you know, embrace our roots, our ethical beliefs, continue to maintain decentralization? The chain should be immutable. We shouldn't freeze those funds. On the other hand, you know, we're enriching Kim Jong-un and giving a known bad actor a nuclear program. It's a tough situation. Where do you stand on?
I think there is a difference between decentralization and like a complete immutability. I guess what you are talking about is closer to the latter. Like complete immutability means no matter what happens, you know, the chain goes on and like everything needs to continue and there is like no like fail safe or anything. And like that's probably like the ideological maxima that's like never useful. It's too extreme. Decentralization just means that there is no one single guy or single entity authority that has the final say, and that needs to be bunch of actors coordinating together and organizing to make something happen. So I would say that decentralization is not like, you know, antithesis to being able to lock out bad actors. It just requires maybe not one authority, but maybe like 10, 15 or how many different actors, validators, whatever, to come together and decide. And of course, it's tricky because they need to coordinate fast and sometimes there is not enough time. But I kind of feel like there is like a wide design space between complete immutability and maximum sort of censorship resistance, and sort of decentralization when it matters, but also not, you know, rigidness. And yeah, I think this is where we should be aiming at. And obviously now many of these DeFi quote unquote protocols actually aren't even decentralized. There is someone holding the admin key. There is like two out of 3 multi-sig. So we don't even have decentralization. But when bad stuff starts happening, it kind of feels like even these parties are so stunned and acting so slow. So we have worst from both worlds. We have like we have centralization that's not even explicit. Sometimes it hides behind, you know, buzzwords and like on-chain sort of theatrics, but there is like still on the back end is still centralized. And when that stuff happens, when the centralization is supposedly, you know, good because you can actually act fast, then, you know, you are not acting fast. So having bad from both worlds is probably where like at least like 50 to 70% of current DeFi is, and that's not a good thing.
And then would you say that what Arbitrum did is an example of the worst from both worlds, or is that positive? Because I could see people arguing that Arbitrum having the ability to reach into a 9 of 12 security council, freeze this, you know, hacker's ETH, which was rare to see that the hacker would leave ETH on an L2. It was almost like a test. It felt like a test. But wouldn't that be a fair rebuttal to your take, that the ability for Arbitrum to be, you know, immutable at the sequencer level, but the ability to freeze assets from a security council perspective in terms of illicit activity, is that not an example of a more positive outlook?
It is, but I'm not entirely sure how many actors Arbitrum had to coordinate in order to enact this freeze.
It was a 9 of 12.
Yeah, I mean, I guess it's fine if it's explicit everywhere that there is like 9 out of 12 sort of actors that need to be mobilized in order for this to happen. Obviously, this maybe sets a precedent, but like I never looked at Arbitrum as something extremely censorship resistant. I always looked at most of these L2s. They are closer to some sort of companies rather than like decentralized, you know, permissionless, immutable settlement layers. This is what Ethereum is supposed to be for, right? So for me, I'm not even surprised that it happened. I would probably be surprised if it didn't happen, to be honest. If they had a chance and didn't do it, that would actually even probably make them liable, depending on where they are based. And all, I'm not a lawyer, but it kind of feels like if you can prevent a financial crime, if you have the ability to do so and you don't act, then you can be held liable.
This is the problem with Circle right now. I mean, if we just think back to the hack that happened before this, you know, the drift exploit, there was USDC taken from this protocol, and it was pretty clearly an exploit right away. People recognized it. Circle had some time to act, and they decided not to.
Yeah, that's weird. I obviously don't have any insight into their inner workings, but they are the most regulated stablecoin. They are a publicly traded company. They are supposed to be the most by the book. So I'm pretty sure they have a bunch of lawyers and other, you know, experts, cybersec experts sitting in a room like looking at this. I don't think they are like sleeping, you know, sleepwalking into you know, hackers laundering funds through USDC. And there is probably something in their terms or, you know, in the law that prevents them, maybe not prevents them, but kind of gives them this freedom to not freeze the assets, or maybe they need a subpoena, you know, from the government. I don't actually know what's happening there, but I'm pretty sure it's not some random coincidence, random fluke that, you know, they just randomly decide flipping a coin, are we gonna freeze or not? I'm pretty sure there are like serious debates, you know, in the background between lawyers and many other team members of Circle. And so I cannot tell you more than I just think that it was well debated, and there is a reason it didn't happen. Maybe ethically, I would be more inclined or like more happy if they did something, because at the end of the day, they are still a centralized stablecoin. They hold money on bank accounts and T-bills and stuff. So it's not like, you know, they don't have to play the ideological side as much. And funnily enough, Tether today froze like 100 million something USDT on Tron, which maybe is connected to Lazarus, maybe not. Like I haven't had the time to look into it, but it's funny that Tether is supposed to be the more gray one, and it's much faster to act.
Yeah, you know, I'm surprised that the politicians in the US aren't making a bigger deal about the amount of money North Korea, provably North Korea, has been able to take from this on-chain economy. You know, this is, they like to talk about everything as a national security issue. Oh, electric vehicles, you know, we need to like save pollution. It's a national security issue. Again, you know, we have a war on drugs, a war on the climate. Everything is a national security issue. But when a known state-sponsored terrorist group is trying to fund a nuclear program, and they're taking billions of dollars from honeypots that are sitting online, all of a sudden that's not a national, we're not deploying, you know, like computer science people in the military and cryptographic researchers at the government were not trying to actively stop this as a nation state and putting resources behind this, it feels like there's something going on there that we're missing.
Yeah, that's weird, right? Yeah, I agree. I would expect, especially Democrats, to use this ammo much more. Maybe they are saving it for a bit later, kind of just making a big pile of anti-Trump, anti-crypto arguments and then like firing at the same time. Maybe they are kind of like waiting for midterms. I don't know, the political games, but it's definitely something that's quite easy to use in a political game. So I'm pretty sure they will do something about it. Maybe after 2028 elections, if the left side wins, maybe we will have another sort of choke point 3.0 or whatever, or something like that, based on, not only President Trump's involvement, but also, all this other stuff that's happening.
Yeah. Fiskantes, getting into more of what you're bullish on and what you're looking at in the market. Sky and one of its stars, Spark, has had a crazy run the last couple of days as a result of this news from Aave and this kind of exploit. Are you bullish on Spark? Are you looking at the Sky ecosystem? Also, USDAI just had a crazy launch. Curious what your thoughts are on that. Give us a sense of like what you're bullish on right now.
Yeah, we were never able to kind of develop a forward-facing thesis around Maker/Sky. It always felt like it's kind of like undervalued forever, but sort of a value trap without much sort of growth story. Like it kind of sits there. It's this legacy thing that kind of works well, but I could never see any sort of like big catalyst that would kind of like 10x their demand, or like to make their product more and more used. It's kind of like generating some yield, some cash flow even for Sky holders. For Spark, I honestly didn't even like think about it. We were thinking like with the team, like we are going through some of the assets, like which assets are going to benefit from this DeFi sort of exploit season or whatever, and we just like couldn't really like. We were more like broadly bearish on DeFi for the foreseeable future unless some new player comes and builds something new, maybe like something that's closer to the security standards of the real world or of the new post-AI North Korean era or whatever. And we were kind of more in the mindset, okay, so we thought that this market is already solved, just use Aave, it's gonna like grow and the winners are going to compound. But now I'm more in the mind of like maybe there is an opening for new players to jump in and build something that kind of overtakes everyone. And I just honestly didn't really think of Sky to be the thing that ultimately benefits. I still think, even though now I'm looking at the chart, it's it repriced, especially Spark, it repriced a little bit. I'm not sure if it's like a knee-jerk sort of short-term reaction based on the TVO boost they got, or if it's something that's gonna start a new long-term trend, pun intended. But I'm not buying it now. With USDI, that's a completely different story. That's like connected to the real world. It's like solving a niche need for smaller scale private credit for computation. And I actually met the founder personally. He was quite an impressive guy to talk to as well. So I'm quite biased there, and we farmed it with quite a size as well. So,
congrats, man.
Yeah. So
what was the return on that?
It depends on the price, but it's been juicy. If the price stays at this level, it will be quite a few double digits.
What is it at? It's at $1 billion FTV. It's at like 900 mil right now. You guys were farming it at like what? Around a couple hundred million or like 80 million?
Yeah, something. We are farming in the private deal, so it's even different. We have like sort of like terms that are a bit skewed to that. So we are part of the private sort of yield deal. I'm not even sure if I can actually disclose exactly.
All good.
But it's just been juicy, and it's after a long time where these like farming efforts, were kind of like very muted. The results were not there, and it's quite a nice win. Even though I'm speaking like out of turn, it's still like it needs to be unlocked over time. But it seems like finally a nice yield farming win for DeFi, and it's a double whammy because it's not just this circular DeFi that like does nothing but loops itself together, but it actually like tries to reach out to the real world and to something that's quite a hot story. Like computation is a bottleneck currently. So yeah, I'm excited about that.
Yeah, this is another part of our thesis that we've been thinking about quite a bit. It sounds like you're aligned here, which is, you kind of mentioned DeFi got so bent into itself, so much looping, so much over leverage, so much rehypothecation, all of that we've called endogenous yield, where it looks for yield to extract from people within itself. And now what you're talking about with USDAI is exogenous, right? Because it's going into a new field, net new users, net new liquidity, and bringing that yield from this new energy source into the DeFi ecosystem. And it feels like that's where we're headed. Have you seen any other opportunities that sort of use a similar model to USDAI, maybe not applied to, AI chips or compute or anything like that, but they're going out into a new field where there's credit that needs to be given and then bringing that yield back to stakeholders on chain?
I have seen some like packaged credit loans, which was more like, something sketchy looking for exit liquidity. So not that exciting.
Yeah.
We are actively looking for more similar things, but it's surprisingly there are not as many. Like if crypto and DeFi is good at something, it's just like streaming capital to a use case that appears to have upside very fast. So I would expect a lot of like kind of like this maybe underserved niche financial fields to tap into this tab, but it's not happening. Maybe you're just not looking in the right places, but I haven't seen anything as legit as USDI. And I'm pretty sure that someone somewhere in comments will show us something that I'm missing, and that's great. So I invite everyone to correct me.
Yeah. Do you have a perps dex thesis? Are you big hyperliquid bull, lighter bull? Where do you stand on perps category?
Yeah, so we hold both assets in our fund. We are long hype since it launched basically, and we also bought a lighter token. We are kind of bullish on both. For some reason, like even though lighter is very solid in all of the important areas, I would say it keeps underperforming. So maybe there is something that we are missing, or maybe market is just wrong. It can stay wrong for some time. So let's see. And yeah, Hyperliquid is just one of the best examples of what crypto and DeFi can actually deliver if done correctly with integrity and long-term mindset and great product vision. Yeah, but at the same time, there is still a bit of for me at least, not to fat one of my biggest bags, but seeing all of these hacks, exploits happening, and seeing how the team around Hyperliquid, like the core team, is still so small. Like it's impressive that they built such a impactful product and project, but at the same time, sometimes you kind of need more eyes to keep watching stuff, because like times are getting more dangerous. There is dark forest everywhere, and can 11 people, even if they are super smart, like stay on top of everything if the ecosystem is expanding so fast? I would prefer them to kind of move more into the kind of like more mature plays where they hire more people from different sort of backgrounds, especially on the cybersec side. Maybe kind of do something with the multisig. So I'm a bit nervous, but at the same time very excited to see something like that happening, because it's a proof that crypto is not a complete lost cause, even though it looks like that to many, right?
Yeah. Vivek and the Etherealize guys put out this productive money thesis signaling Ethereum to trade at 250,000 per ETH at some time in the, I don't know, let's call it the next decade or two. Are you still a massive ETH bull? What's your honest reaction to seeing a 250K per ETH projection on the timeline?
I don't know, man. I cannot take these things seriously. Like I haven't read it, to be honest, so maybe there are some good arguments that I'm missing, and I don't want to do this thesis a disservice, but just from the number, like it's like from the Succession series, guys, I love you, but you are not serious people. It's like I feel like that, like come on, like even Bitcoin is not 250K or whatever. Like I remember even 2021 where people were calling for 10K ETH. I was already kind of like mentally shorting that number, and it's like 5 years later, 10K ETH was not never even close, and we are already like, I understand that you need to kind of paint the pie in the sky, sort of dream big and kind of shoot for the moon situation, especially after it is underperforming for so long. But like, come on, like, let's. I mean, and actually, like some of these TradFi sell side guys, I'm not even mentioning Tom Lee, but even like the more serious ones, they actually have outrageous price targets too, like especially around Bitcoin. Like we always see some Goldman Sachs or whatever analyst saying is like 700,000 for Bitcoin. So it's not like specific to crypto, but like I always cringe so hard, and I read it and I change my mind, but it's like 1% chance. So I don't take it seriously. I'm not a massive ETH bull, and I'm quite optimistic about ETH, but at the same time, it feels like it's lost between being like a worse store of value, kind of trying to compete with Bitcoin and failing, and then also being worse sort of DeFi settlement layer, because all these L2s are like centralized. All the DeFi that was supposed to be safe and attract the institutions because they have the longest track record, now it's kind of dissolving in our hands with just use Aave not being a thing. So even this sort of leg, which was kind of Ethereum's biggest advantage, I would say, like the longest standing protocol with the most DeFi money, most TVL, it feels to me like it got much weaker recently. So I don't know. I want it to do well because it's still, the prime asset after Bitcoin, and I don't think it will flip Bitcoin anytime soon. But I also feel like as a like fund manager and investor, I can find much better risk reward propositions elsewhere.
Yeah, we haven't talked about the flippening in a while. I also noticed that you guys have this. You have your Sigil Core Fund, which is up quite a bit. And then you've also got this Sigil Stable Fund, which has performed quite well. You also mentioned, the Tom Lees, the Michael Saylors. I know Saylor has this stretch product that's yielding, 10+%. How much, when it comes to the Sigil Stable Fund, are you looking at on-chain strategies in DeFi, especially, with the recent exploit? Have you decreased some of your DeFi yielding allocations? Are you looking more off-chain? Where do you go for yield these days?
We are still mostly on-chain. It's not 100% like when we started Sigil Stable, which is our like yield farming market neutral fund. Now it's around, would say 50%. We are not really like decreasing our exposure because the hack happened or the exploit, but we are just mindful about the risk reward. And we even before it happened, we kind of felt like the risk reward is no longer there. The base yields are super low, and the risk is kind of increasing with new language models becoming like more capable of exploiting stuff. So we are mindful of that, and we are now like employing a bunch of solutions on our end that will enable us to mitigate some of these risks, and some of these are commercially available solutions. And we are now deploying to other strategies more actively, sort of managed market neutral positions on DEXs and even on exchanges. There is also quite a lot of value currently, and it will grow in time, to have sort of TradFi leg, meaning having a TradFi broker and exchange where the fund can do ARBs and like kind of hedge or trade between RWAs on chain and their, the spot or other counterparts in the TradFi. So this is kind of where we are positioning our stable fund right now. And you asked about Stretch. It's very interesting. We are actually discussing it today for quite a while on our call. Sailor is a madman and kind of a grifter, but I think he found like the golden grift in a sense that it's very well designed. What he's doing is very well designed. I think he mentioned somewhere he's using AI to kind of help him to kind of design the best possible sort of scheme for his goals. At the same time, he's trying to tap into the largest sort of, I'm not gonna say underserved, but it's like extremely hungry capital, which is very hard to serve, and that's basically pension funds, which pension funds, especially in US, they hold trillions of dollars in assets. And what's happening is obviously the demographic curve is kind of collapsing on the young bottoms, meaning that there is much more old people than young people. So it's much harder to sustain the pensions. And for the pension funds to kind of survive, they need to go a bit, further on the risk curve. So they are starting to buy some junk bonds. And there is also there was a situation a few years back where Fed actually for the first time bailed out some junk bonds because they were held by these pension funds, right? So if pension funds start buying something like Stretch because it gives them 10% yield and it's high enough, I think they need something like 8% yield to kind of fill the gap of being too many old people for the young productive demographics. They will need to get more yield, and this is like something that they can use. And if they start using it, if they start like buying it and earning this yield from Stretch, then it becomes a sort of a question of bailout if something bad happens. So if Sailor kind of is able to position himself into this sort of pension fund pipeline and really like make it happen, then he can sustain this flywheel for quite a long while, barring some black swan that maybe he cannot control, like I don't know, quantum threats, sucking out Satoshi's coins or something similar. Or maybe like Democrats coming in power and banning all crypto. But barring that, I feel like it's not gonna like collapse anytime soon. It actually can propel a lot of Bitcoin price too.
And building upon your ETH thesis, there's been calls that now Tom Lee is going to implement some sort of Stretch product on Bitmine.
Yeah, that could. I mean, that would actually kind of flip my ETH thesis in a sense that would provide like a very credible sort of marginal buyer. I believe that it could be better asset because it already has native staking yield. So
that's the argument for it.
Yeah. But then you can do it for Solana, right? And then like, where do you stop, right? But it is definitely, I mean, it's the most obvious thing for Tom Lee to do. I believe he kind of ran out of money almost otherwise, and he's almost at his goal to accumulate like 5% of ETH supply. So now he needs to figure out something else to kind of propel his game. Obviously, he's not in such a good position because like it's much smaller than Sailor. He's not. I mean, even though he always appears on CNBC or whatever, I believe Sailor is just much better cult leader and salesman. He only has MicroStrategy. He only has Bitcoin as his single religion. Tom Lee has like his granny shots ETF, and I don't know what else he is doing. So for him, it's just like a kind of like one of the quests. But for Sailor, it's do or die sort of situation. But I believe that Tom Lee can do it, and then it will be interesting to have the conversation if it's really bullish ETH and if it should be in our core holdings or not. But it doesn't happen yet, so we don't need to wait. I'm not gonna just speculate on it unless I see something from him.
Yep. Yeah, of course.
Last thing I have for you is, what does your portfolio look like right now? Like, what are you holding?
You mean in our Sigil core, in our main fund? We are long. I mean, I'm not gonna list all the positions because we kind of have quite a bit of stuff, but we kind of divided between our like long-term core holdings that we have like a long-term thesis for, which is not that many assets. It's hyper liquid. lighter. We actually hold Zcash. We can talk about it. It's like a thing that I kind of believe can have an asymmetric upside still. We hold a bunch of other things. We don't hold that much DeFi tokens. We hold some long tail of speculative sort of, almost like venture bets that are like liquid tokens, but they just like behave like VC bets because they are so small. They are usually like going to zero, but some of them can actually like do something and reprice massively. Like it can give you almost like a venture outcome. We are still around 33% in cash too, with the goal to kind of deploying into these smaller sort of more like undervalued opportunities, or maybe when we see some bullish signal, like just go big on ETH or BTC based on the thesis we mentioned. We hold some Solana. We still hold some Sol. It's kind of, we are going to talk about underwriting our thesis for the future. So maybe we'll sell that. Maybe we'll buy more. Let's see how that discussion develops. We are always kind of open-minded about these re-underwriting events that we have. We have some stocks. We kind of are trading a bit around with Robinhood, Coinbase, Circle. We also have a bit of Galaxy, and yeah, we were able like last year to kind of sell them quite high, and now we are buying them lower. So we have stock portfolio, which I mean, it's so comfortable as an investor to invest in stocks where you don't have to ask what is the tokenomics, what does the token do, what is the value accrual. It's just like all this apparatus already is like exists and the problem is solved, and only thing you need to figure out is like the business itself. Whereas when you are in crypto, like 30% of your time you are spending on the token utility or whatever value accrual, how strong it is, how easy it is to rack token holders, which like stock solves. So we are quite comfortable in our stock positions. And lastly, what we are looking at now, this is not our position or anything, but we are trying to figure out how to hedge against tail risks. Let's say, quantum threat in 3 years suddenly is real, Satoshi's coins start moving, Bitcoin down 60-70% in one candle. Like you want to, like ideally, if you are like long with 70-80% of your book, you kind of don't want to have this sharp spike down. Ideally, you want to have a dry powder, or maybe you want to have some sort of a tail hedge that kind of gives you more dry powder, so you can buy cheaper, or you have part of your downside protected. So it's quite an interesting problem to solve within crypto, because like nothing is really that liquid. Like there are no put options or any other like similar derivatives that you can really play with any reasonable size and with reasonable like price levels. But yeah, maybe with TradFi MicroStrategy there is something there. So we are looking at this direction as well.
Yeah. Last question I got for you, Fiskantes, is just based on your portfolio construction, are you more bullish crypto stocks or crypto tokens?
Still crypto tokens. Oh, and by the way, I forgot to mention one of our large positions is a private equity position in Polymarket, which grew quite massively. So, but that one is liquid, so we need to kind of account it with a discount. So yeah, if we count Polymarket as an equity position, then it's like very close tokens to equity, but without Polymarket, which is like a private position that we are holding, we are still more long tokens. I mean, even though there are like, it's much more tricky to underwrite tokens these days, we still feel like this is our core expertise. So, like Hype is our probably the biggest position right now, if I count correctly. It's kind of close, but yeah, I think we are still skewed towards digital assets / tokens, and yeah, we are slowly building our equity portfolio too.
Yeah.
Fiskantes, thanks for joining, man. I'm glad that you guys were marked safe. This is a hell of a last couple of days in DeFi, man. Appreciate your time, and just interesting to hear how you're thinking about the market and your positions and all of this. So appreciate it.
Thank you guys for having me. It was a blast, and hope to talk to you again sometime soon.
Let's do it,
buddy.
Thanks for
See you
content.
soon, man. Yeah, boys. Well, he's bullish, so that's good. Someone's got to be bullish. Wasn't very bullish on ETH, I'll tell you that much. Wasn't surprised, to be honest. I think a lot of these OG DeFiers are they're kind of shifting their views on ETH.
Yeah, I haven't heard a lot of bullish ETH takes aside from the usual suspects, the Etherealized guys, Tom Lee, etc.
Yeah. I didn't know that Tom Lee was going to do a stretch product.
It's rumors. I mean, it's speculation right now, but it feels like a natural next step. He's basically following the same Sailor playbook, 2 to 3 years lag, right? So I'd imagine that he looks, once he deploys a lot of the capital that he's raised, he's going to look to raise more debt, do some ATMs, do some differentiated income products where he's able to, say, hey, I'll sell you this yield product 8 to 11%, which, Sailor's got 2 different income products. Sell those income products, raise cash, and then use that cash to go buy ETH.
Yeah. Well, interesting conversation. That guy's a whale and has a lot of size in these positions. I'm sure that poly market position is 8 figures now. I'm sure his hype position is 8 or 9 on a fund. So why don't we get to the news, Rob? Let's talk about what's going on. There's a lot going on, and Lido is under fire. I will kind of walk through what's happening here with Lido. So they put out this thread. It's an update on the Earn Vaults. So Lido has these Earn Vault products. And basically what's happening here, I put out a quick tweet about it. Just read quickly. Lido's found themselves in an unfortunate and precarious position here. The Earn ETH Vault has RS ETH exposure. It's about 9% of the vault's TVL. It has also exposure to other looping and vault strategies, which were kind of like, if you will, like commingled, that also had exposure to RS ETH. They're getting hammered right now by the high borrow APYs, so they're operating clearly unprofitably from a yield perspective. Luckily, ETH has been relatively stable, if not up, since this happened. No sign of timeline for a fund recovery from Aave or from Layer 0 or from Kelp. Earn ETH is, however, backed by Lido's DAO's treasury ownership, which signals that users likely will not lose in this scenario unless this delay lasts weeks on end. Lido's committed to putting up about $3 million of their own share in these vaults as a backstop to users. If this frozen funds or lack of liquidity, however you want to call it, continues on for weeks on end, Lido will offer their users the ability to exit with the maximum anticipated haircut. I thought it was closer to 10 to 20%. I think it might be actually closer to 5 to 8%. And so, yeah, that's where Lido's at. They are unfortunately affected with their vault product, and none of their actual staked ETH or wrap staked ETH products are affected, but they had these Earn Vaults that were affected. So you can see how they had one vault with exposure, other vaults that had different types of exposure commingled, and now they're kind of on the hook to the tune of a couple $1 million, at least from the treasury, to pay back the users, if not allowing the users a maximally anticipated haircut. I think this is signaling to me that the fact that they had to put the timing thing in there, that this lack of liquidity on Aave may last a lot longer than we think. It may. And it's possible that it lasts weeks.
So let's just back up a little bit. Now, and I might not have all the details because there's a lot of moving parts here, but from everything that I've seen, it's Kelp DAO. Obviously, Layer 0 is involved, and it was their core infrastructure that really got exploited, and then Aave got stuck holding the bag. But it's Kelp DAO that essentially has the choice, the unilateral choice, as far as I understand it, to determine how losses are socialized, whether they're going to apply losses to only the L2s versus socialize losses across all the chains. Can they just do this at any, and DAO, in my mind, means that there's a governance vote that should take place, right? And that is how we're going to determine whether L2s are stuck holding the bag or if it's socialized across mainnet as well. Is that DAO vote happening anytime soon?
I have not heard anything about it, and I honestly don't think it's going to be like a DAO structure. The issue is, while they can determine what's going to happen, Aave has to manage the bank run that's going to happen once this liquidity is returned. They're going to have so much liquidity being pulled out of the market, out of the Aave, and liquidations happen on these loops. Liquidations will happen on some major lending markets if things don't change within the next 10 days on some of these loops.
Because the borrow rate is so high.
Yeah.
They're just
and Aave needs to manage that, and they need to manage the bank run, the withdrawal of funds.
Now, that makes sense, because if Kelp DAO determines like, hey, these funds are mute, these funds are okay, but this other batch of RS ETH is kaput, then everyone's going to try to withdraw the good ETH, right? And borrow. If they have the bad ETH supplied to Aave, they're going to try to borrow funds against that and get some funds out. Mm-hmm. But Aave has everything frozen right now. So,
well, it's frozen because there's no liquidity.
Right.
So they just put out a tweet.
Utilization is at 100%. So that
it's fully slammed. So RS ETH reserves, this is from Aave, had been paused across Ethereum, Arbitrum-based Mantle-Linea. This was done with the objective of recovering additional funds as recovery plans progress. So they're paused on all the markets for RS ETH.
Yeah, it just seems like if they're frozen because there's no liquidity, Aave could actually freeze the markets. Don't allow anyone to withdraw collateral. Don't allow anyone to lend, borrow, nothing. Freeze the markets. Yeah. Let Kelp DAO determine what happens to those assets. And then you have those assets, both good and bad, locked in the protocol, which would slow down a bank run. And then in the time frame, first you need Kelp DAO to determine what happens to the assets. And then while you still have the markets frozen on Aave, you can determine, hey, this is our remediation plan on Aave. Feels like that's how this should go.
And Layer Zero has said nothing. They've been, since their original announcement, they've been quiet completely.
Which is just completely quiet. I mean, I'm not surprised. They don't want to be caught holding a $300 million bag, but ultimately it was their infrastructure that got exploited.
Yeah. So that's where Lido's at. Kind of switching gears here. Another crazy morning. Flipping into Tether. So Tether blacklists $344 million of USDT in coordination with OFAC and US law enforcement. This was tagged earlier this morning, and there's rumors flying. I mean, it's, because Justin Sun was threatening to sue World Liberty Finance, or this is Iranian USDT, or this is connected to the Lazarus group. I mean, there is everything under the book, under the sun is flying here for why Tether froze these funds. And $344 million is no small amount. I mean, this is significant. So I don't know what's happening here, but people are shocked. Like, they're shocked that Tether was moving so much faster than Circle on these freezers when they're supposed to be more of like this, more gray area company. And people are just already trying to mentally grapple with what's happening with this RS ETH exploit. And then this freezer this morning was just wow.
I remember when Tether was this shady organization operated by Bitfinex. It was do their reserves actually exist? Are they fully backed? Are they insolvent? You had Bitfinex, the Twitter account, was constantly berating them. It felt like there was so much evidence against them. And fast forward, I mean, that wasn't that long ago, less than 5 years, right? Fast forward to today, it feels like Circle's regulatory moat has completely eroded, and Tether is completely capitalizing on the US market. They're acting more steadfast in seizing these assets, working with U.S. law enforcement. We don't know. Okay, so actually, I'm running a Grok search right now on who this seizure could be.
Yeah,
and it seems like independent on-chain analysts traced the wallets and found they are hops away from the Hoin Group, also known as HoinPay or related Cambodian entities. Hoin Group background is Cambodia entity, U.S. Treasury FinCEN primary money laundering concern, long accused of operating as a major laundering hub for pig butchering scams, cyber fraud, human trafficking, and even funds linked to North Korean hacking groups like Lazarus. Tether has frozen smaller amounts tied to the Hoin Group in previous years, cites 29.6 million in 2024.
Wow. What a group. Wow. Yeah. I mean, look, man, this is what the freezing ability of these centralized issuers is for. And again, like, if they were given information that suggested that these funds were illicit by bad actors, are they complicit in the activity if they have the ability to censor it and stop it and they don't? And that is the legal question that they are battling all the time and that they have to face in court or, you know, basically do what they've done.
I think both of these companies are fully complying with law enforcement. We don't know how long Tether was working with OFAC behind the scenes in order to, you know, put a subpoena out there and ultimately, you know, have instructions to seize these funds or freeze these funds. The drift hack happened so quickly. I mean, Circle, it seems like could have frozen the funds. They had a few hours, but that is too fast for law enforcement to come in, issue a subpoena. And then Jeremy Allaire and Circle said, hey, you know, we need law enforcement to instruct us. We're not just going to go freeze funds willy-nilly. Yeah. Even though it seems like they should have tripped some alarms. Tether, because this came out of nowhere, it seems like, wow, they're doing all of this freezing like very proactively, but they could have been working on this behind the scenes.
They were.
I just think it's interesting because, you know, for so long we were talking about central bank digital currencies. What's the difference? Like if I'm just curious, you know, if you have law enforcement instructing these groups to seize these funds or freeze these funds, you know, these guys are an extension of a CBDC. The law enforcement effectively has control. I mean, they have to be legal and compliant. So it just feels like if we have the ability to freeze funds, you know, do you see a big difference here between CBDCs and privately issued stables?
I mean, yeah, there's obviously like nuances, right? It's like, oh, it's not a central bank issued note. It's not, you know, you don't have an account with the Fed, right? You know, there's not an account with Tether.
But the main criticism of CBDCs was always the surveillance state.
Yeah, and the censorshipness or the ability to be frozen. Like, you know, you say the wrong thing in your public content and you go home and your CBDC account is emptied.
I guess, you know, we had private companies, like, remember the censorship regime around social media where, you know, the Democrats, I think, were saying, hey, Facebook, like, you got to kick Donald Trump off Twitter. Like, you got to kick him off Facebook. You got to cancel these people. At a certain point, I think they started to push back on that. I'd be curious if we get to a point where the OFAC, FinCEN, regulatory law enforcement regime gets so far overextended and tries to censor some of these funds that we do get some pushback from these privately issued stablecoin companies. I think that would be healthy. And it's probably good to have some separation here.
I think that's where it's at. Like, I don't think Circle and Tether are just like feeding information to the governments and the law enforcement and saying, hey, come censor or come tell me where to free. I mean, maybe they are. Maybe that's exactly what's happening. But I don't think it's like it's more of like a collaborative process, I would assume at this point, rather than like hey, we're telling you to do this. Like, I don't think the law enforcement has such a unilateral decision-making over the choices of these private companies. I think it's probably like less than what you assume, but maybe I'm completely wrong and they're just feeding them all of the data, all of the wallets, all of the kind of chain analysis and, you know, telling these law enforcement agencies come back with feedback, with direction, and we'll comply.
I think they need to be in compliance. They don't want to do anything illegal because then Circle and Tether get in trouble. but I don't think it's as extreme as them feeding all the information. I think they want to make sure that there's no money laundering. And so Tether and Circle probably have risk controls in place, these wires, if you will, that if they get tripped, they go to law enforcement, they say, hey, we had this wire get tripped. Do you want us to do something about it? In that sense, I think it is very collaborative, right? And they're not just feeding information. And so, yeah, at this point, it feels like, you know, they're on the same team. But if there, I don't want to speculate too much, but if there is a situation in which, you know, a government or a law enforcement agency says, hey, we don't like these people, like North Koreans, pig butchers, human traffickers, very obviously on the wrong side of the law.
Definitely.
If there's gray zones, like, hey, we don't like this figure of speech, this guy we think is doing like harmful, like corrupting the children and like, you know, double speaking and like doing these sorts of things, like we had, you know, in the whole Edward Snowden, censorship regime, social media cabal, then it gets into a gray area, and we might see this relationship between private stablecoin issuers and law enforcement agencies get less collaborative and more like, hey, that's not the right thing, and get more politicized.
It's going to be a really, really weird battle between Circle and Tether to like adhere to the standards of compliance that, you know, they should be, and also maintain the direct long-term viability of the crypto environment. And so I would expect to see more and more of that kind of scale up. Let's move on from Tether as we have a very, very interesting week in DeFi here. So
this is still Tether.
Again, this is the specific addresses.
Yeah.
We can move on from this, but you see it's two addresses, 212 million, 130 million, to the same addresses on chain, on Tron.
Yeah.
So these are the exact sources here for you guys.
And like we said, this is looking to be like it's tied to this Cambodian money laundering group.
Yeah, this is wild. All right, let's move on from Tether here. It's a weird dynamic of the timeliness of these two events. So this Stani post and what's happened with RSETH and then the Tether freezer. Past few days have been intense, but I wanted to give some updates as we continue to work on this. Our priority is our users, and every decision we are making is aimed at an orderly return to normal market conditions and the best possible outcome for everyone involved. Okay. Okay.
It's very PR.
Working around the clock, the team has made progress on multiple paths forward with several partners. The Arbitrum Security Council also recovered $70 million of ETH, which could meaningfully reduce the potential exposure, and multiple discussions and solutions are being considered. I'm confident we'll move towards a strong resolution. Okay. Reviewing what happened and learning from it matters, but pointing fingers is not something that gets us to the other side of this. Well, that is what KelpDAO and Layer Zero both did. Every bit of my energy right now is focused on the outcome for Aave users and the protocol. Aave has been my life's work, and this is an important moment for DeFi as much as it is for Aave. I'm deeply grateful for the support and collaboration as we've received from builders and partners across the industry. We'll get through this together, and we'll continue to publish updates on Aave as they happen. So, I mean, yeah. I mean, I don't have much.
No, I mean, obviously people want action, right? This is good kumbaya. Like there's nothing wrong with it. People want to see that like these teams are communicating.
Yeah.
I think, look, you're right. Layer Zero did a post-mortem and hasn't spoken about this since.
And it was completely blaming KelpDAO entirely.
And that's the wrong approach, right? Like we should see more communications coming from them, even if it is a kumbaya thing and they don't have like just that they are, you know, actively engaging in discussions to try to fix. How about fix all the DVNs out there that are still frozen? All these one out of ones, right? They've started to do a lot of this, but you know, how about we upgrade all of those? And they've started to make some work there, but how about talking to these teams, putting out some joint announcements, improving the architecture so that we prevent this in the past, more transparency, more communication on that front.
Yeah, I think, and then KelpDAO put out another post today that kind of said nothing. Like it was it was very just vague, and no one's committing to a timeline. No one's committing to a kind of date or an overall like process, But you can imagine Stani's in the war room right now taking calls, trying to get loans for Aave. Like he's trying to get loans, we pay back over time based on revenue from the protocol or whatever it is. And these are not the type of conversations that get solved in a day. I mean, this is like you're going to the largest funds and allocators in the space and potentially outside, and you're asking for like tens of millions of dollars.
I mean, look, we this feels like when CZ offered to bail out FTX, right? And we obviously know how that didn't work out. And so Stani's got to be extremely careful. There's going to be sharks swimming in the water, right? We know that there's going to be sharks offering all kinds of loan terms to Aave, to Stani. He's going to sift through a bunch. I do think that there's going to be, look, it's not a, whatever it was, $4 billion hole like it was on FTX. 350 million was the number that I had seen. Make that 70 million less as a result of Arbitrum. It's $250 million. It's a lot of money, but it's not insurmountable.
Yeah, I mean, I think the bad debt's going to be less than that. Should just be around like 120 maybe. So, all right. Well, we can keep it rolling. I think we have another kind of, this is exactly what you were talking about, Rob. I'm going to pass this one over to you. Wrap Bitcoin, DVNs. This is kind of what you were saying here about teams upgrading their architecture.
Yeah, so we'll take the rest of these headlines over the line. Andy's going to set up the nest for our next guest in person, Mike Dudas for Six Man Ventures. Andy, I'll talk to you in a bit.
Alrighty.
Let's hop over to Wrap Bitcoin. And so here we go. I mean, obviously huge that Wrap Bitcoin did not get exploited. If this had happened, this is a major systemic risk to the entire on-chain landscape. Wrap Bitcoin has gone through, multiple iterations and changes over the years. But if this had gone sideways, this could have been really, really bad because Wrap Bitcoin has been so implemented. It's been so integrated into the rest of the on-chain economy that obviously we need to avoid a lot of this systemic infection. And so what they're doing is they're updating their DVN configuration. So we're moving out of these one-of-one DVN designs and more into, some of these upgraded layer 0 architectures. I have a feeling, look, layer 0 is going to have some fallout from this. There's going to be teams that are looking at their infrastructure. The initial step is going to be, hey, we're going to upgrade one-of-one to maybe a 2-of-2, 3-of-3 sort of configuration. But then shortly thereafter, you got to think that there's going to be some backroom conversations talking about moving away from layer 0 altogether. Wrap Bitcoin didn't get hacked here. That's good. Obviously, these guys are working on improving their architecture before, more of these exploits become attempted. So let's move on to the next one. I believe our friend Joel, who has been on the show before, is going to be discussing this Thor chain. I want to call it an incident. A lot of the money laundering took place through Thor chain. They profited quite a bit off of fees. I think there's a video that goes along with this. So let's play this video and go from there. We'll see what Joel has to say.
I'm about to lose my goddamn mind. So a ton of money got stolen from this crappy, stupid DeFi protocol bridge thing, whatever. It turns out they had a one-of-one deviant multi-sig, whatever the fuck this is. They lost all this money to, again, no surprise, North Korea, the smartest people in the room, it seems these days. The people who actually understand the decentralization or lack thereof in the space. Oh, they're swapping through Thorchain from one transparent, easy-to-trace crypto to another transparent, easy-to-trace crypto, that both of which don't censor transactions. And you're saying that Thorchain and other dexes like this should be shutting down, stopping this stuff because your crappy-ass centralized bullshit lost fucking money? Fuck you. Absolutely fuck you. You've been playing around with this stupid-ass trust me bro-fi forever, scamming noobs, doing the most terrible centralized, no safeguards, nothing, no decentralization stuff out there. Getting people to pour ungodly amounts of money into this stuff. And then they're getting wrecked. By who? The North Koreans, of course. But they're getting wrecked. It's your fault. And then we finally get something good in the space. We get decentralized, censorship-resistant exchanges. And you're saying, no, that's too dangerous. Well, go fuck yourself. I'm sorry. This isn't our fault. We have been doing things the right way. I haven't had a bank in 10 fucking years. That's because I care about decentralization. I want to live on freedom money. I don't want to be censored and rug pulled, which is all the government and custodians do all the time. And you said you're on the same mission as this, but then you do this one-of-one bullshit and lose all your money. Not just your money, but a bunch of stupid noobs who come into the space buying your stupid-ass promises. You lose it all, and then it's my fault for wanting to be decentralized and censorship resistant. Go fuck yourself. Like, I'm gonna lose my mind. This is insane. Kim Jong-un did you guys a favor as the avenging angel of DeFi, coming on in and being the security researcher of the year, poking holes in all your crap, charging probably less than your actual auditors would charge to show you that your shit sucks. Listen, he's a bad guy. North Korea's a bad guy. All that stuff, it's no good, but it's your fault, your responsibility. Every single person who promoted one of these centralized bullshit things, every single Etherean who is like, well, layer 2 scaling roadmap, and then now you have Arbitrum just arbitrarily censoring and stealing people's funds to prevent this hack, which should not have had to exist if you had a one fucking boat. I'm gonna lose my mind. I'm losing my mind. Satoshi is rolling in his grave. Censor your mother if you want censor.
Censor your mother if you want censor is hilarious. Joel, I love you, man. I think you've actually got generally the right idea here, and I align with a lot of it. The part that I don't align with is this. If you have the ability to censor and you know North Korea is flowing and laundering money through your protocol, then yes, you should censor that. You should not contribute to North Korean nuclear weapons. Now, you might disagree with the premise. The premise here is that you shouldn't have a one-of-one. You shouldn't have a protocol that you can censor. And I agree with you there. You know, if we have the throwaway test, right? You throw away the keys. You can't censor. There's nothing that you could do to stop the flow of these laundering funds. Then there's nothing you can do. You built truly decentralized, censorship-resistant infrastructure. Good for you. But if you have the keys and you have the ability to censor and you see that there's money laundering going through your protocol, I think you have the moral obligation to stop it. Now, you could argue you have the moral obligation not to build a censorship compatible protocol to begin with. And I think I'd actually agree with you there. And so, you know, layer 0 and the one-of-one configurations, you and I very much on the same page. Those should not exist. Those are against the spirit of everything that we do here. Arbitrum, you could even argue. This is maybe the gray zone. 9 of 12 security council, centralized single sequencer. That's a very gray area. The fact that they have the ability to censor, maybe they shouldn't have had that ability to begin with. But since they do, let's just exist in the reality that we exist in. They have that security council. They should use it in this situation. Thorchain, I don't know if they have the ability to censor. If they threw away the keys, they made the choice to be decentralized, be totally censorship resistant. Good for them, right? That's a smart, good, as long as they don't get in trouble for doing that, then they can do that. They retain the ethos of this industry. But on days like today, if you still have the keys, if you still have the ability to prevent money flowing into state-sponsored terrorism, I'm going to argue that you should take decisive action to stop that flow of funds. All right, guys. I think that's enough for Joel. Like he said, he's been on the show before. Joel, come back. I'm happy to chat with you on the show about this. It's obviously there's lots of moving parts, lots of dimensions to this here. Guys, we're going to do quick standby. Mike Dudas is going to be joining Andy in the Tokenization Tower live from the Empire State Building, the Nest. We'll be right back with our in-person interview of the day. Six Man Ventures, Mike Dudas, live from the Tokenization Tower, coming up right after this.
Alrighty, guys, we are live with Mike, a friend of the show. Mike, how are you, man? Welcome to the show.
I'm doing great, and thanks for having me.
Beautiful day in the city.
It sure is, and this view, I'm sure every guest tells you, is ridiculous.
You can see all of your previous
Exactly.
places, all of your current places, everything.
Yep. Old neighborhood, current office, and yeah, it's a beautiful day.
How about the Knicks, huh? With the just heartbreaking loss in game. Is that game 2?
Yeah.
Yeah.
So a little salty, but we've got a game tonight. And,
Yeah.
I'm in the city, so I'll find somewhere to watch it with some fans.
Good, man. Well, this is kind of like our annual state of venture side of things. I think we did this last down in Soho last year. It was a different state of things, different market, for sure.
Least, yes.
We had Tom Dunleavy on from Varus Capital. He kind of wrote this viral kind of long form piece about just like the state of founders and the state of venture in crypto. And I think you'd kind of been talking about this quite a bit last year as well already. And his general framework here was like, the amount of VC dollars in the space is dwindling. There's less raises happening. There's less quality teams. It's just a different world. But I kind of thought of this as like, well, if you have capital and you can sniff out the good founders, there's a lot less competition. There's a lot of kind of newer founders coming into the space with probably a better pedigree than the previous cohort. And we ended up agreeing that this 2025, 2026 vintage was probably going to be one of the more successful ones. Do you agree with that? Kind of how do you think about this current lay of the land with this current outlook for these founders?
Yeah, so I'm a venture capitalist. I'm deploying in 2026. So
There
I'm
you
going to
go.
tell you this is going to be the best vintage
Ever.
we've ever had.
LPs, listen up.
But a couple of things. So one, there is plenty of capital in the crypto markets, in venture crypto markets. There are a number of mega funds that have been raised. You've seen the announcements. There have been a number of early stage funds, including ours, that have been raised that folks aren't announcing. But there is a tremendous amount of capital that's resting and ready to be deployed. So that's not an issue.
Yeah.
It's the other point you raised is, hey, we've been talking about, are there great founders? Well, the answer is yes. Are there great ideas? Clearly there are, because you see a number of breakout protocols, most of them founded many years ago, some of them in other bear markets. But there are ideas, there are founders, and there's capital. So this absolutely is not a time to be sort of depressed about being in crypto based on those things.
Yeah.
What's happening is there's just explosions sort of happening. And I don't want to laugh about it because they're serious, but there's hacks, there's founders being accused of things, being arrested. There's all of these, there's the Trump family and all of the things associated with them that are looking increasingly sketchy. So there's just a number of really the regulatory environment in DC where we're really eager to pass laws. We thought they'd be passed by now or very close to, and they're not. So there's just a number of sort of crypto macro things happening at the same time that the fundamentals are improving dramatically. So there's not a lack of capital, not a lack of founders, not a lack of ideas, and not a lack of usage. But it feels like every week there's like something that you didn't expect that just comes in, and the next hack, the next bad regulatory thing, the next person who gets arrested. Yeah.
And so are you seeing less competition then on the deal side than
So
previously?
I would say yes. It's one of those things, right? The consensus deals are, because of what I just said, are hotter than ever. Prices are getting pushed up. I would say irrational. There's always one buyer. When we look in 5 years, some of them will have looked rational, and they'll be geniuses. It's a tough market in that I would say founders don't have. There are good founders, but they don't have confidence to take great risk right now. The world outside of crypto and inside of crypto, there's just so much change happening so fast that I do believe, and we're seeing it empirically, that we're seeing we assess talent, and we're seeing great talent gravitate towards not great ideas or towards consensus ideas at a rate that we haven't seen in the past. So that's what I would say. And I think that's why you're seeing this lack of deployment. It's because venture capitalists have this like slightly higher view of the market where they can see a lot of things. And they're just getting the same pitch over and over and over again. So it's hard to discern who's great and who's not. We're not seeing wild, crazy people. And we're not seeing right now many marginal things that would excite people to take a risk, founders to take a risk. The classic thing would be there's not a marginal retail buyer, for example. There hasn't been, I haven't seen a breakout consumer app that inspire people. So I think there's just a little bit of a lack of inspiration right now. But, you know, so basically that's, I think, what the market sees, and that's what's reported on. Underlying that, though, there's, as I said, you know, stablecoin issuance continues to increase. There's incredible usage, like globally, but it's just not stuff that's reported on. And money is moving into those companies, venture money, business money, et cetera, et cetera. And it's not the things that are necessarily reported on, like a Canton. It's a lot of these other startups that are actually building on public blockchains.
Yeah. I mean, I think that there's a strong shift in the flows towards a lot of the companies that are operating more like in between this convergence of the on-chain finance world and the traditional finance world. You know, we call this kind of like this convergence. You've got a lot of the tokenization companies getting a lot of the bid. You've got stablecoin companies. You got interesting on-chain credit opportunities. There's obviously a abundance of neobanks, it seems like now. You know, I'm curious in this vertical, kind of shifting from like, okay, where is the broader market at to more kind of vertical specific here. Where do you see the opportunity with investing on the edge of these two worlds kind of coming together? Like, is there clear margins that can be undercut? Is there clear time or settlement opportunities that can be shortened? Like, where is the investing at the margin for the convergence happening? And like what kind of deals or what kind of ideas, you know, have you been seeing there?
Yeah. So all the way across the spectrum, the things that we're looking at are what is new and very inventive. And by the way, that's like in the DNA of our firm. Like, we prefer things that are on chain, even though like my background, look, I worked at Venmo, Braintree, PayPal. We're looking for things that are native. We think, because what happens is, you know, Venmo, when it came out, blew people's mind. There's like, you could text people money. There's an app from, like, that was alien. So typically, Polymarket, when it was first introduced, an idea, it was an alien. It took 6 years for it to become, now it's like mainstream and consensus. So we're looking for, I guess, what I would say is our alien ideas in markets that you're talking about, because we believe that then a couple of years out, those will become much more mainstream. The challenge is, so RWAs, like as an example, like looking at traditional assets, what you're seeing is a lot of them, the alien things, like there's the way to get to them and to introduce them is still, you know, by regulatory arbitrage. So I'm going to list oil on Hyperliquid. And it's going to become the most liquid market because everybody in the world can play. Like, market makers don't have to be, you know, regulated. Like, they don't have to worry about the CFTC and others. That's what's happening. That's where you're seeing like growth and maturity. And so at the venture stage, because, you know, the Stable Act passed, the Genius Act, like things are sort of confusing. I would say that we're in a bit of a paralysis for a lot of emergent entrepreneurs in terms of like, how regulated do I go right now? Because in past cycles, firms have been penalized by taking a regulated approach too early when their competitors were like, yeah, we're just going to YOLO. Example would be just like issuing private stocks. There's a bunch of these firms offering like Anthropic shares tokenized. Like, some of them have like somewhat more robust structures with some protections. Others are just YOLOing. And it feels like the YOLOing ones are like growing faster right now. I don't know or believe that that's sustainable. So I think, you know, when you talk about this convergence, it's a very confusing time. We would probably default again towards, so And also the model breaks down. This alien model breaks down when you start to talk about traditional asset classes, right? So things like equities, you know, and things like structured private credit, where you want big names. So it's I don't like at the very early stage, you just haven't seen a lot of capital move into, for example, RWA, issuance, tokenization, et cetera, companies.
Yeah. You guys had a pretty strong focus on, and you're still doing this kind of consumer on-chain environment. A ton of deals that you've done have been in that category. Obviously, Pump has been like the kind of big one for the market that, you know, you've grown a name from. I'm curious, I saw one of your tweets about them just absolutely absorbing that supply and the market not really responding to it. And the pushback that we get when people present that thesis is that the idea that is currently somewhat consensus, I think, is that the token launch market is not going to grow in the same way that perps will grow, so that the buybacks for something like Pump or the economic model is not valued in the same way that it is with Hyperliquid, because perps are potentially going to be this massive category, and maybe we've reached the ceiling for the on-chain token launch market. Why is this wrong?
Yeah, so I'm not even going to debate. It's just wrong. Like you can see it. Like we're in a brutal bear market. There are folks who are issuing tokens and Pump's doing, you know, $1 million on average or more a day. Like it's a almost $400 million revenue run rate company. I think the more interesting questions are around, okay, given that, why is the token not trading to reflect that over 2-year track record of revenue and now almost a year track record of buybacks? And what I think is, you know, obviously the team takes a posture that I don't love. Like I love the team, but I don't love their posture about not communicating with the market about how robust their business is, how defensible it is, et cetera. So they don't do the traditional, you know, investor relations. But at the same time, I also understand a little bit why they don't do investor relations, because, you know, fundamentals in crypto aren't rewarded. Like, and part of that, it's because we don't know what fundamentals are that like matter. And what I mean by that is like equities are, you know, an asset class that have like decades of, you know, rigor around them, how they should be valued, what the rights should be, et cetera, right? Like, you know, debt securities, like very explicit, predictable in most asset class. I mean, obviously we've had many times when we've, you know, had obscure ones, but the most straightforward ones, easy to understand, right? Like I understand what a treasury bond is. Tokens, like there's not standards. They're very new and it means a million different things. And so as an investor, fundamental investors, whatever that means, look at something like the Pump token, even the Hyperliquid token, Hype, and just don't understand like how to value it. It doesn't have the same rights as things I've seen before. So it's confusing, and therefore these things trade. Pump significantly, Hype, I would argue, you know, reasonably at a discount to what the fundamentals of their businesses and the prospects should suggest. And so candidly, in a bear market, I think it makes sense. Yeah. I think in a bullish market, provided that, you know, Pump continues to deliver. So they'll reflexively go the other way. Now, the question you asked is Pump's business sustainable? Like, I actually think it's more defensible, than the many businesses that I won't say more defensible than a Hyperliquid or something like that, but I see some of the best companies in the world trying to compete with Hyperliquid right now. Yeah. It's a very consensus opportunity. 100%. And by the way, it's one that I agree with, which is perps are, you know, a superior, you know, way to express a perspective on an asset than what we've historically had with options. Okay, so I believe that. The world believes that. Yeah, more assets can be exposed to this. You know, prediction markets will eventually like move in this direction as well. It's like all merging into one, but that's going to be wildly competitive. Yeah. Like, so there's a question about whether, you know, what the profits will be at, you know, will they be at execution, market making, you know, who knows? Yeah. Will it be much more? So what Pump has is something that it's out of favor. Everybody's like meme coins.
Yeah, it's out of favor big time.
Yeah.
And anything on chain is out of favor.
Yeah. And by the way, they're out of favor. They, admittedly, haven't introduced like over the last year much publicly novel stuff, but I would argue that's because the marginal person who cares about what they do, that retail person, isn't in crypto right now.
Yeah,
that person will come back.
Yeah. Yeah. So still very much in the camp of being the on-chain consumer landscape will continue to grow. I don't know if you invested in Mega ETH. They just announced their token launch on April 30th. They've got kind of a growing on-chain primitive infrastructure, a lot of like gamified, like interesting ideas. And it's kind of like very, very interesting bifurcation happening with like chains like Mega ETH, protocols like Pump and companies like Pump. And then like you know, tokenized assets, RWAs, onboarding these large players. This is what matters to us. This is what our like the future is of this industry. And then you only have a couple chains and protocols still optimizing for like this more retail on-chain user base. How do you think about why that's happening?
So Mega ETH specifically, I really like them. You met them. ETH L2s were something I didn't understand.
Yeah, it wasn't part of your thesis.
And it like clearly hasn't worked out particularly well. I think like my guess with a Mega ETH is like, it's a great name. Like they'll probably end up as a super app and like there will be a chain and then people contribute to it and like things will feed back, like kind of like Hyperliquid. Yeah. Hey, trade XYZ being on top of Hyperliquid, it feeds back to the underlying beast of Hyperliquid. Like, but you know, Hyperliquid's the brand, the app. It's different than a Solana and Ethereum. And Bitcoin's very different. Yeah, I'm not sure we're going to see. Like, we probably will. We're not going to expect it, and it's going to be obvious in hindsight. Maybe there will be some L1 that does something wild. I don't know, like quantum compute or like something like BitTensor, you know, with AI. Sure. Who knows? All right. But something like Mega ETH, I would probably value on like just application revenue versus anything else. And I don't know what applications are on it, but I like the team. Seems like they have an excited community. Same thing with Monad. I did invest. I was like an angel investor in Monad. Team, love them, and you know, really wonderful and built, I believe, fantastic technology. This isn't a shill, but you know, they'll have to probably go. I'm just not convinced you can like be valued Monad in the same way that Solana was. So I think it's going to be what's the application revenue on top, and I don't know. They're going
is that a time thing? Is that just because the era that Solana was in was like pre this new era of thinking, or is it just
the pitch is just too close to what Ethereum and Solana are? Like BitTensor is very different, right?
But like a base, a Mega
I'm
ETH,
a quantum
Monad,
or I'm a proof network, something like that is just way different as an L1
than a fast, cheap retail chain.
Yeah. So I could be wrong, by the way, and like I continue to advise Monad, you know, entrepreneurs, and I think it's interesting. Like, but I think like Mega ETH looks more like an app chain to me, or like they're going to be a super app. We're investors in Plasma. It's going to be a stablecoin led, I think, super app with, you know, a supporting chain around it. Like that to me can have value, but that's different than Solana, Ethereum, and then obviously Bitcoin.
So you bring up Plasma. We're also investors in that on our fund. Tempo just came out and partnered with DoorDash to do their agentic payments. And what do we, so, you know, rewind a year ago, these stablecoin chains were like the best thing. They were like the very hot investment. It's kind of changed a bit, but it's still like very different than its, you know, traditional L1. Your thesis around something like Plasma is just that, okay, they have this Plasma One neobank. It's going to just be all around this kind of central app. The rest, like sure, there's other primitives on that chain, but in the sense that like a general purpose chain, just kind of ends up being like, this is going to be a stablecoin payments DeFi chain specifically.
These are fintech companies. So like Plasma versus Arc versus Tempo, it's just going to be three of the largest fintech companies. Like it'll be like, you know, PayPal versus Venmo versus Stripe. Like, you know, that's what it's going to look like. It's just going to be a question of, you know, which rails, merchants, consumers, you know, all the other stakeholders in, you know, payment settlement movement, et cetera, and financial services operate in. But you have to look at, like, Tempo is just a business. Like, it's not like, you don't think about it like a blockchain. And they don't today.
No.
They have an incredible advantage. It's like part of the Sequoia, you know, paradigm cabal. It's like, you know, DoorDash is working with them.
Yeah, it's pretty nuts.
But like, incredible team. I haven't looked deeply into the product, but I assume it's incredible. And fees in the near term aren't important. It's like, can we get people moving dollars across our settlement network? Right.
And that's the same thing for Plasma. So like the way that you think about these specific companies, or they're chains, but they're payment services based companies trying to basically earn money or earn fees or profits and generate revenues just based on volume of stablecoin payments, essentially.
Yeah, to some extent, exactly. And like what that means, like, is going to look a lot different over time, right? Like today, it's like we think of things in terms of businesses and humans, and I'm not going to get like too abstract. The entire train ride in today, I was like, the 6am Ventures team. We've like my partner Carl and I worked at Paxos, or at Google Wallet. Aaron's been super deep in AI and agent payments. Like we were talking nonstop about how a lot of like the stuff, like the way people trade, is the way people pay each other. It's not going to be the same in a couple months versus the way it was 6 months ago. But I have no idea what that means. Genuinely. Like I'm not trying to like fake you and be like, I'm some genius seer. So I think you can make though a safe bet that and again, legacy bank tech isn't all still built on COBOL, but like I will definitely say that agents aren't going to be able to transact on, you know, rails that were programmed 60 years ago. Okay. And the way that we're going to buy stuff, the way we're going to express our preferences financially is going to move very differently. And so that's the bet that, for example, Tempo is making. You know, that's the bet we made on Plasma. I think for the general purpose chains like Ethereum and Solana, they're in a risky moment. Like I actually do think they need. We haven't mentioned Base, by the way, which is fascinating. I think Coinbase has really struggled and sort of lost their way, and I have no idea what they're doing. But it's Solana, I don't think has clearly expressed, like, why would I use a general purpose chain and a public network? And why is that better for settlement? Like, is it censorship resistance? Is it speed? Is it cost? Is it composability? But like, why does that matter to the business or the individual in Argentina or, you know, India? I actually feel less confident in that story than I did a year ago, right? So we're just in a, like, it's a super exciting time because things are so fluid. It's super confusing. And honestly, I would say the market feels incoherent. And so actually a fun exercise would be to go through and to look at how many different, for example, layer 1 and layer 2 blockchains Visa has done a major partnership announcement with in the last 24 months, or MasterCard or whomever. Like, dude, it's everywhere, wide all the time. Open.
No, I know. And I mean, you've been in the space for about as long as I have, or perhaps a bit longer. And, you know, this was not a part of the old regime. These announcements were like once a quarter, once a year at best. And, you know, prior to 2020, even in 2020 to 21, you know, there's, so obviously we had this big drift exploit and now this big, you know, layer 0 Aave Kelp DAO exploit. And there's been two separate schools of thought or actions from the largest stablecoin issuers in the world, Circle and Tether. Circle has gone out and not frozen any of the funds that were then bridged from Solana to Ethereum, and then tornado cashed and mixed and gone. And Arbitrum came out a couple days ago and froze 30K ETH on their chain, and today Tether froze $344 million of Tether that was connected to a group that was doing anything from pig slaughtering to human trafficking and everything in between, and also perhaps some Lazarus ties. And so these two companies are kind of operating in like a flip-flopped manner than what I think the public consensus was of them. Circle being highly regulated public company, Tether being kind of known as more this gray area, not so compliant. But as you see, Circle has failed to freeze these assets, and they've gotten a lot of pushback. And Tether has frozen some assets as of late, and is kind of being, I think, rewarded in the public eye. I'm just curious on the stablecoin kind of landscape right now. Do you have a strong opinion on, let's say we get to $1 trillion of stablecoin supply? Is this just Tether like just absolutely taking 70, 80% of that, and Circle having a small share? Is it going to get to be more even? Like, what is your broad view of how these two heated rivals go head to head for the coming years?
Yeah, so it's pretty clear that Circle's strategy is to be as close to a CBDC as possible. So they are basically saying, hey, government, we are completely aligned with you. We lobby, we take you through all of your methods of power and execution as our, sort of general ruler, right? And if we don't get a subpoena, we won't freeze funds. Like our rails are your rails, our issue. So I'm exaggerating a little bit, but that's pretty much the story that Circle's told through their actions, through their silence. And it's candidly in character and not surprising. They've never been DeFi native. They've never been, they're the guy who carries a skateboard behind his back into the high school meme, and it's like, hey buddy. So it's a very revealing time for Circle. There's a place for them. Like, they can be the government bucks. I call them the cuck bucks. They're going to be the government dollars. And by the way, that's not a bad product. Government dollars on a blockchain are way better than the shit I get from my bank, right? So good for you, Circle. You won that market. But I think that is a smaller market than the world and the way that we're headed. Where the reason is because the boldest people in the world, what you want to do at any given time is like the people who are creating the future, I want to serve them. I want them to believe in me, are not going to believe Circle. They're going to believe Circle is government tethered versus, innovation, future, and judgment tethered. And the best people building the best, biggest businesses and, money producing and sharing things in the world believe in themselves and their judgment. Circle's not aligned with that. It's a bald guy with a suit who's in DC, 3 times a week, and basically would rather a judge tell him what to do so he can absolve himself of any responsibility versus going and making a really crucial decision to protect his customers from losing hundreds of millions of dollars. Tether has said, and by the way, I've had my issues with Tether in the past, and I think the Tether of today is extremely different than the Tether of 7-8 years ago that I had significant problems with. I won't relitigate that, but there were pretty clear gaps in the balance sheet. They weren't super transparent. They've changed as an organization. They don't talk to me because I was pretty straightforward about what was going on then. So it's not like we have a great relationship, but I do respect that they will make difficult decisions. And so I think that these companies need to make difficult decisions because, let's be honest, nobody looks at Tether and USDC Circle and says these are decentralized companies, and I believe that these are decentralized assets. Once you decide you're going to transact in them, the expectation should be that like I might be censored. I might have my transaction impacted. And I believe that by a wide mile, I mean, we're talking like professional NFL team versus high school football team. Tether has blown Circle away in terms of decision-making about how to handle absolute black and white decisions over the past month. If North Korea is stealing $100 million plus from individuals, you should stop that if you are able to. Circle's on the wrong side of history, and they're going to pay for it.
Wow. On that note, is there room for other stablecoin issuers in the market?
Unquestionably.
Yeah.
You saw USDAI, no exposure. This isn't a shill.
Yeah.
But there are, so sorry, I wouldn't say that's a stable coin, but I think there are, tokens that are, yes, there's more room for stable coins for starters. Like we don't have success in stable coins outside of USD at any real scale.
Right.
And I think that's going to happen. And then I think you're going to start to see coins that generate yield in stable ways, like with USDI and others, where hey, maybe you'll pair higher risk yield coins with a stable coin. But I absolutely think that there are going to be alternatives to fiat money. The same thing that like got me excited about crypto, Bitcoin in 2012. But like with sort of dollar denominated real world asset ties, not like, hey, the machines are purely making money.
Right.
Although, by the way, a lot of it is going to be tied to machines, but in a very different way than it was historically with Bitcoin. Yeah. Meaning, hey, we need GPUs, we need to finance them, et cetera.
Yeah. USDAI has found itself in a very nice narrative position at the very least and product position.
And they're just great. I mean, they're doing a group. Yeah.
The stablecoin issuers, the kind of stablecoin as a service, you got Bridge, M0, a couple of these others.
Paxos.
I
used
of course.
To work there, so I have
these three are like, those are kind of like the big three. What's the future for these guys? Like, I think the stablecoin issuance business was extremely hot for about 18 months. I think margins kind of came down. I think the amount of capital required in terms of outstanding supply from day one increased significantly, such that it was actually going to be a profitable operation for the companies that wanted to work with the Paxos or Bridge or M0. How do you think about the specific cohort of companies as they look to kind of expand their business? You obviously have a lot of experience here. What is the future of these types of companies as it becomes more and more competitive to launch stablecoins successfully? As kind of the same thing that happens to blockchains, I think will probably happen to stablecoins, where there's this kind of explosion and then consolidation, kind of in the consolidation phase, at least for USD denominated stablecoins.
They're going to look like any other market. Like it's, it'll be like 70, 20, 10, right? It's going to be a big market. Yeah. It's not a clear market now, right? Yeah, like, hey, is the OCC charter what I should get? Like, should I issue the stable coin as a New York Department of Financial, an NYDFS coin? I would argue that the market's a little bit slower in terms of these. Every single company that has users and has money on their platform stored should want it in a stable coin that's backed with treasuries. They don't all today. It's not worth the lift. They're worried about it. Yeah. Like everybody's going to be doing that, and they're not going to be like going and getting the actual charter themselves to be able to issue their own dollars. So massive market for a handful of X as a service stablecoin providers. Yeah. The banks aren't going to do this. It's not their core business. So I would imagine like Stripe. I would imagine meaning like Bridge. I would imagine Paxos. And probably like Zero Hash, I think, does this. Like, I don't know who's going to win, but those are going to be really big companies. And then whoever does this internationally, because there are very, very, very big money markets that are untapped there. Yeah. That's a market. I spent some time as an advisor at Paxos after I sold the block. So I'm very bullish on stable coins.
Do you think Paxos will IPO?
Great question. I think Paxos will be worth... I think I can say this. I'm a registered investment advisor. I think it's a very valuable company. I don't know what Chad wants to do if he wants to be a public company CEO, but they have some incredible partners. It's a very good business, and it's funny, every cycle, they continue to get the best companies working with them, right? It was, or the highest revenue producing ones. It was Binance, then PayPal, and now Schwab, and they have a bunch more in the pipeline that they're not talking about.
I've heard some insane stories about that guy.
Chad?
Yeah. some very crazy lore of just all different types of movies and culture and all sorts of stuff.
He's an awesome individual.
Yeah, interesting. And this IPO pipeline, Kraken has confidentially filed. It's so weird that these confidential IPOs end up hitting the newswire. It's like Kraken's confidentially, filed for their IPO. We had this IPO kind of season, if you will, kind of close to the top last year of the cycle, and there's been kind of hints towards Kraken, Paxos, FalconX, a couple other of these names. How do you think about the evolving public markets opportunities to invest in the space as it pertains to like just buying the crypto assets? Now we have ETFs, we have all different types of products. Like, what is the reasoning why more public companies on that are like on crypto rails or crypto backed entities going public? What does that do for the industry?
Yeah. So in a market where people cared, it would be great. Meaning like Coinbase, Circle, Kraken, eventually. Like, it'd be great. People would be like, look at these public companies. What else is there? Where's the alpha? Oh, it's on chain. Problem is, and this is true not just of crypto, but of many industries, SaaS, consumer tech, AI is sucking all the air out of the room. So it's not that Kraken's, I would imagine they'll have a successful IPO at some point in the not too distant future, but right now nobody gives a shit about crypto IPOs. Like, let's be honest, they're focused on SpaceX, they're focused on Anthropic, they're focused on OpenAI, and what I think will be useful for crypto, and this could be me with my VC hat on, is you have a lot of folks with a very low cost basis in these companies. And they're the types of folks who are crypto. Like, there's a lot of crossover between the folks who incubated early crypto and early AI. Some of them are in jail for their lives, but it wasn't just SPF. Okay.
Yeah.
So there was a crossover, a curiosity in innovative edge technology that disrupted basically centralized incumbents and, the sort of holders of information, money, et cetera. Okay. So these companies are going public over the next year. And there's no question. I can't tell you whether they're going to trade up, whether they're going to trade down or sideways. There's so much at play geopolitically.
Yeah, of course.
Who knows? But the bottom line is you're going to get a lot of liquidity for people who are sympathetic, interested in, and engaged in crypto. And the size of, the companies coming to the public markets in crypto are much smaller. The size that it takes to move the assets that we care about are much smaller.
Yeah.
Like, my default view, so the last cycle ended sooner than I expected. I didn't think, 1010 was going to be the end. I thought we were going to go into 2026. But my expectation is once we work through, like, now that we're in this thing and we've been, 12, it was sort of Trump was the top.
Yeah.
So 2 years from Trump is like 2027, Trump, the meme coin, is 2027.
Like the end of the year.
And that's kind of lines up with, when all these
IPOs will launch and 4-year cycle.
Assets will be out public.
Yeah.
I think we're in like a pretty constructive period.
Yeah.
And it's been fascinating to watch how much bad news we've had, narrow bad news that we talked about earlier. But like, asset prices haven't gone down.
No.
I've been surprised by that.
Yeah.
Candidly, I have.
Yeah.
And what's interesting is because the industry has rallied in a way that some would say is unhealthy to long term, but like Tether, supporting a drift recovery process.
Yeah.
Arbitrum freezing RSETH, right?
Yeah.
Like, I think like we can debate these things all day, but they are stability mechanisms. So it's very different. Most of the issues we've had this cycle have been on chain.
Yeah.
But the centralized entities that totally effed up, like sort of last cycle,
For sure.
not the same ones, but I'm saying central, like have actually stabilized the on-chain ecosystem, and that convergence you were talking about, it kind of looks like some of it's working.
It is.
Now that does say, the question is, okay, does then the value accrue to the centralized entities or the on-chain entities?
Either way, it's enough to boil up in the bear. Like a lot of these things, they boil up and they keep happening. And it's like, we had all these, like, I think in hindsight, it'll be like, we had the most institutional adoption we've ever seen in the industry. The Clarity Act passed. We got through all of this IPO AI hype. Crypto was absolutely left to dry after everyone was chasing these, like the largest AI company IPOs. And that's going to come with Q2, Q3 this year, definitely by Q4. There's a setup to, to be had of, these things launch and crypto's at its, lowest points, and we'll see where we go. But yeah, I mean, it's the amount of attention that is going to flock towards that period of time and that asset is going to completely leave everything else kind of like sidelined.
That's what I would say for a period of time. And then, the bull case is, again, there's liquidity for a lot of the folks who are interested.
Yeah.
And then there's this bull case that, again, this is for a separate conversation with actually my partners who focus on this, but with, does the advent of agents and people performing transactions occurring different ways portend, a much larger market for crypto than we have today? And like the answer is probably yes.
The last thing that I wanted to ask you about was I talked to Carl about some of the vault stuff that you guys were writing about and working on. Obviously, this exploit that happened with Aave was, kind of on Aave's curation model. They were at fault. Layer Zero's security model, Kelp DAO's entire setup, right? But this happened in a pooled lending model, which is affecting all different types of people. Vault's very institutionally friendly because they want a very risk managed and kind of like parameterized way to express their credit on chain, whether it's originating new types of credit, new types of RWAs, products, etc. And they want to do it in like a very controlled manner. Morpho's kind of like stepped up here and been like the de facto vaults layer. I'm just curious, like, what is this vaults concept that you guys are working through, this vault thesis generally as we kind of close out here?
Yeah. So the idea of vaults is it's really hard for the average person or even institution to figure out, what do I invest in on chain? Like, what is the risk? How do I assess all of these different things? How do I rebalance over time? To your point, it hasn't been done exceptionally professionally over the last 18 to 24 months while this vault term has taken off. I would say Morpho actually takes a really hands-off approach, which sort of absolves them of any responsibility. They're like, okay, the man, like, so I wouldn't necessarily say that vault, I wouldn't say Morpho is like solving the problem.
No, okay.
I would say they're like pushing a lot of the difficult decisions to folks on, assets listed on their platform. One of our portfolio companies, Upshift, just announced, hey, we're working with Securitize to do a NAV analysis, net asset value analysis of, basically every vault on our platform, so that institutional buyers can get confidence that this is a place to invest. So it's not only our own, measurement of the value of these assets, but we have an independent third party who's credible, and does this professionally for a number of asset classes, valuing our assets. So we're moving in that direction. It's not in response to what happened. Like, no, that was something that it was clear to everybody that to bring more dollars into on-chain vaults are one mechanism where, hey, we can select different assets, put them together. We're starting to get into structured products, which are things that are appealing to people. But the point is, the last month and a half has been a clarion call to everybody that we need to up-level assessment of risk management, assessment of asset selectors. So there's like vault issuers, the folks who curate them. And it all ties back, though, to what are the assets that we're putting on chain? And, basically, and then what are people doing with those assets? And so obviously having, in the Aave situation, RS ETH, basically be convertible into ETH at the ratio that it was, like unacceptable given
and it's just
what it
fuel
was
to the
backed
fire.
by, how that asset was being used. Everybody knows this. This isn't finger pointing at this point. There was like just a chain of poor decisions. And what I'm seeing already is there's going to be much slower pace of new asset innovation at you'll see at massive scale.
Yeah.
You're just not going to see somebody open a $300 million vault with a weak asset with no collateral backing or little collateral backing and poor behavior behind it.
Yeah.
So I'm very bullish on the structure. I'm very bearish on the behaviors of the past.
Yeah. Ladies and gentlemen, that's Mike. That is Mike of Six Man Ventures. That is our annual episode. Great to have you.
Awesome
Fun to be here.
Thank you.
Guys, we'll be right back. Thank you so much, Mike. That was fun.
I enjoyed it.
Cheers, man.
Money, power, and money, power, and
we get deep, you know we get deep. You know we get deep, we get deep, you know we get deep. We get deep, we get deep, we get deep, you know we get deep. We get deep, you know we get deep. deep. We get deep. You know we get deep.
All right, guys, we're back. Nikhil, welcome back to the show. I think it's maybe second or third time. Good to have you. What a week. Good time to chat.
Oh yeah, absolutely. What a week. Funny enough, I mean, I'm like wearing my suit. I was swinging by the Treasury's office, like U.S. Treasury's office earlier today. So yes, what a week on many fronts.
Yeah, man. What's going on over there? What's the Treasury thing? And they're looking for some compliant stablecoin products.
They are. I mean, they're really thinking a lot about this, right? Of like, so we have. We'll talk a little bit more about this, I'm sure, in a sec. But yeah, for Treasury, they're thinking about rulemaking from Genius. And so how do we think about AML, CFT compliance, all the really boring stuff, but the things that matter a lot to folks like them, even more relevant now as you see kind of exploits with Drift and then Kelp and like what should stablecoin issuers be doing if they're regulated stablecoin issuers in the United States. So a lot of like difficult questions there.
Yeah, definitely. I mean, I just had Mike from Six Man Ventures on, and he was he called Circle closest thing to a CBDC. It was quite the take. So this compliance. So we've had conversations this week about rate limits, about kind of the future of DeFi being, I don't know, more looking like what we see in the traditional world, and that this kind of open, just kind of lackadaisical, anything goes aura energy outlook is kind of one of the more immediate past. From your perspective, from the work that you guys are doing at Predicate, like what is this vision for a more compliant, regulated, or just like more secure, safe future, right? We also had Rune on from Sky this week, and his main line was like, look, the future of scalability in this industry in terms of size is just predicated, no pun intended, solely on security and safety. Yeah. Talk to us about how you see this kind of like playing out. What's your vision here?
Yeah, so I mean, I think we've all kind of aligned on the world of blockchains as ideally this global financial settlement system, right? And then you really have this permissionless open infrastructure that everyone can build on. So, you know, take Ethereum or Solana are like really good examples of this as open permissionless blockchains. And so then as we move to this world of, you know, we're going to make, blockchains are going to be the global financial settlement system. You're going to have financial products that are built on blockchains. And some of these will be fully unregulated products, and some of these will be regulated products or really products that operate in regulated markets. Example of this is stablecoins. It's not just, and then you have, you know, tokenized securities, different types of vault products, yield products, all those types of things. These are really financial products that are built on blockchains. And the great advantage of this is all that, you know, it's 24/7 access, global liquidity, composability, programmability. Those are really what are the driving kind of like product features of all of this. So then when we say, great, blockchains are going to be this global financial settlement system, and you're going to have financial products that are built on those blockchains. I think you guys have been you've had a lot of these talks recently of how do you make this something that actually is secure, is safe, is compliant, is able to operate in regulated markets. People can trust that this can be used, and not only, you know, both institutions as well as just, you know, people who live in normal markets, right? And I think that's the world that we're going into. And for us, this is when you go into the application level, right? Like the things that are built on it. So we would consider a stablecoin as a financial product. And so how do you have programmable real-time compliance enforcement? And I think there's different facets to this. There is the security component, which is really important. And then the other part that goes hand in hand with that is actually the AML, anti-money laundering compliance piece. Those go really closely together, and you have to account for both sides of that coin at the end of the day.
Yeah, man. I mean, so in this instance, right, of these two exploits, both Arbitrum freezing the funds, 30K ETH as of a couple of days ago, Circle opting to not freeze, Tether comes out today, freezes $344 million of USDT that was linked to some group that does nefarious things. What is the right way, the right mental model to slap compliance on, or these kind of like regulatory frameworks onto these situations, or just similar ones, right? Like it's not a one size fits all kind of dynamic. Like what is the spectrum of risk parameters and you know, compliant on-chain behaviors and outcomes that Predicate has kind of identified? What does that spectrum look like?
Yeah, and I'm glad you talk about it as a spectrum, because that's exactly what I was going to say as well. So I think it's not just, sanction addresses that are being identified by OFAC. That sanctions list is only around like 80 something. It's like 88 addresses. It's very limited, right? But we know that the number of malicious actors is well beyond that. We know that it was DPRK in North Korea that was the ones who led the drift exploit. Those addresses are not on a sanctions list, but everyone and their mother knew that it was North Korea, right? We all knew. And so, and then the same thing for Kelp. And so then you have this whole question around where does control lie? Who has control and what is that responsibility there? And how is that actually communicated to users? I think in the case of Arbitrum, you had a security council, which is really, really cool that you have a mechanism for that. I'm going to go a little bit more on the Circle and Tether one because I think this is where I've been really kind of closely following it. And we have a product on the stablecoin side that is also kind of relevant for this. But you have a case where Circle, of course, freezes addresses per law enforcement request, lawful orders, as well as sanctions. What they explicitly don't do per their policy is that they won't have the discretion on their end to freeze when they believe they might need to. It's entirely based off of law enforcement coming in and then saying, oh, we'll do it. Tether has a slightly different approach, and the reason for that is because Circle, as a registered issuer in the United States, is basically worried about that liability of it. If they do a freeze that is not explicitly said by law enforcement or by a government regulator, then they can get sued, right? And so they don't want to be in that position. Tether, not being in the United States, has a little bit kind of slightly different operating approaches to this. And I think that's a really big question right now. So that's when we were actually talking to Treasury about is, I think the world is going to go in a direction where, and this is what I think the US government this is what Treasury is pushing for, is that issuers should have that discretion. They might need to have that discretion, especially if you're, let's say, a financial institution and you have an OCC charter and you're like, we are an issuer. That discretion of, we know that this is a North Korean address. Everyone knows. But waiting for a law enforcement order takes time. I was talking to someone at FBI and they're like, at best, we'll tell you, we'll be able to get back to you in a week because of staffing. They have so many things they need to do. So you need that discretion.
This guy's talking to the feds.
Yeah, exactly. And we're talking about, digital assets that move in really, really fast in its final settlement. What are you supposed to do? And so I think it's that discretion, right? And you're going to see that when an organization has control over something, the question is what is that discretion? When do they take an action? In the case of Arbitrum, they have a security council. And so that's for us from Predicate, we're building those kinds of programmable pieces that directly plug into, let's say, an asset contract that gives the organization the tools to say, wait, there are certain things that happen. We want it automatically executed in real time, right? So OFAC issues an update. These addresses should be frozen in real time within seconds across all blockchain networks. We're not waiting. We're not doing any manual processes. We work, let's say Blockade or Hypernative identifies that there's a major exploit. Everyone knows that this is the case. We should be taking an action immediately. We shouldn't have to go and spend all these different cycles on it. And so I think that's the world we go to is it's a spectrum and it is more programmable in real time.
Yeah. What is this organization that gets tagged in all these exploits? Is this SEAL org?
Yeah, SEAL Intel.
SEAL Intel. What is SEAL Intel?
Yeah, they're an ISAC. So an ISAC is an information sharing consortium. This is not unique in crypto. You have them in traditional financial services as well. But really, when you have all these different organizations, exchanges, financial institutions, fintechs, issuers, all these different groups, you have all these different data silos. Then you also have your blockchain analytics providers and investigation data. All these things exist in silos. Yeah. And so the goal is you have some amount of data sharing, right, in the case of major incidents. And you also have investigations around that. So SEAL is an information sharing consortium. And what they do is they're able to respond in real time. You have an elite team that is able to support on incident responses, that is able to flag malicious addresses and users, all those things. That's where they really come in. And it's incredibly valuable. It's not only in crypto, ISACs exist in traditional markets as well.
Gotcha. So, for example, you guys are doing this work with Hyperlane on their native routes to enable configurable freezes on certain assets. Again, when it comes to using a team like SEAL, using a spectrum that you've laid out here today, you've got to be quite quick in the decision making, right? As soon as Arbitrum froze the 30K ETH, the exploiters immediately started taking action with the assets on Ethereum chain itself and started bridging via Thorchain to Bitcoin. How do you manage the speed of execution when it comes to potentially putting your product into actual use with real funds, bad actors, illicit activity. You're under fire. How do you manage that?
Yeah, so I think you're in the Plume office, right? So Plume is actually one of the groups that uses Predicate for Nest.
Sick.
Here we
go.
Let's
go,
even
Plume.
better, right? So
let's go, Plume.
And so an example here is, Seal identifies these malicious addresses, right? They're flagging that. And we have all these different data feeds that are coming into our system. So we've essentially built in configurable policies. And so different organizations integrate us into their smart contract. And so when you have these different data inputs, we'll have defined these, like what we care about. What are the markers? What are the flags that we want from TRM, from Seal, from Blockade? What are the things we really care about? If those triggers happen for addresses that are interacting with, let's say, Plume or with Hyperlane or with an M extension on M0, that immediately gets executed. That transaction is rejected at a smart contract level through Predicate. So we have all these different data feeds that plug in, and we define and configure those specific configurations and requirements for each application.
So I saw there was this blockchain association tokenization workstream. Ondo, Uniswap, A16Z is in it. I think you guys are a part of it as well. What are these large, like for example, I saw a headline today. It was like JP Morgan says that these latest exploits are causing institutional allocators to think twice about DeFi. And you're like, bro, like obviously, like thank you for the headline, watcher guru. Like you're really delivering insightful information here. What is the single biggest compliance risk management conversation happening with these types of teams inside this work stream, or even just like from your perspective, what is that single conversation looking like? Is it just let's not lose our clients' funds on chain? Is it that simple?
No, it's a bit more. So I think it comes down to compliance is one of the, if not the biggest blocker to institutional adoption when we think of digital assets and from a regulatory perspective, right? And so these types of working groups, such as like blockchain associations, tokenization group, is really what are the different pieces across different organizations? What are we building together? And then how are we articulating that from a blockchain association perspective to regulators when it comes to policy making? So both to Congress people on the legislative branch, as well as the regulators, whether that is, OCC, Treasury, SEC, all those groups. But the goal here is that, there's really good work that's being done across all the different members. And so we should actually have a concerted effort to say, here's actually what we're doing. These are things that we're literally solving right now. These are not things that we're just seeing happen. We're taking very proactive measures against it.
Nice. Do you feel like people take you more seriously in that suit?
I had to wear a suit this morning. That's a good question. You have to change it up, right? Like if you're in DC, you put on the suit. If you're in New York, you may not wear the suit unless you're going into a financial institution office. I think you got to be able to do all parts, to be honest.
I can see the Circle office from here in the World Trade Center. They're trying to figure out what's going on over there.
But yeah, you got to be able to do all of it. But yeah, in some of these cases, you got to put on your suit for sure.
Of course, man. You have a piece on you as well, or just
no, I don't. Not at the moment.
Just don't want to get mugged in DC, huh? Lovely. What's next for Predicate, man? What's like? This has got to like light a fire under your team's ass, right? Like all this is happening. Like DeFi is clearly going to rate limits, to these kind of more compliant measures. Like it feels like the time for what you guys are building. What's next on the pipeline, on the integration side, product side? Where's your guys' heads at?
Yeah, so we had a product launch announcement today. Actually, it's live. It's been actually in production. It's not like we're announcing and we're like, oh, now it's live. It's been live with significant usage, but it's the new one is an asset compliance product. We plug in directly into a freeze manager role of a stable coin or a real world asset, and we can do automated freezes, restrictions for where that asset can go. That can be fully programmable. So to make this even more tangible, take with M0, they have their stablecoin consensus, MUSD, right, which is by consensus. So the cool part is, consensus has a number of automated capabilities that just other stablecoins may not have with Predicate and M0. So, sanctions update happens, that is immediately updated real time across all networks that MUSD is on as they add more networks. And then, when like the drift exploit happened, for example, consensus was having automated systems so that their asset could not go to those addresses involved in the drift exploit or in the kelp exploit, Kelp exploit. So it's that kind of stuff.
That's
But
awesome.
Programmable real-time compliance, it's embedded into your asset contract, which all doesn't break the composability or the programmability of the asset. At the end of the day, like 99.99999% of users should actually not notice anything. It should really be the malicious users who are real-time blocked from accessing assets and saying that, cool, your money's no good here, right? Like, we're not going to allow it. That's a big push on our end.
Insane developments on this Kelp DAO thing as we've been live. Lido has proposed a coordinated RS-ETH relief effort on the research forum, proposing 2,500 ST-ETH to the Lido Labs Foundation from the DAO, which will forward the funds to a dedicated relief vehicle alongside contributions from other participants to be used solely to reduce the deficit, the root cause of current dislocation, and mitigate disorderly liquidations affecting users. Wow. Lido is barely impacted here, and they're coming out, and they're just absolutely saving the day. This is insane. Wow. I mean,
it's systemic, right? Like any of these things, some of these things, if they go wrong, it's even if Lido's not directly affected, it still indirectly hits them, and they have we all need this solved, right?
Yeah, and these pools have just been frozen for so long.
Yeah.
Insane. Nikhil, man, wishing for better days in DeFi. I hope you guys find yourselves on the other side of this with a lot of business. I appreciate you joining. I appreciate the work that you're doing down in DC for the industry. And congrats on the product launch, man.
Appreciate it. Thanks, man.
Cheers, Nikhil. See you next time, buddy.
Bye.
Bye, buddy. Alrighty, guys. Yeah, as I said, pretty big kind of news here. Lido is saying that they're going to come out and make a 2,500 ETH contribution to be made available only as part of a fully funded recovery package rather than as capital for a partial recovery. Wow. Okay. Big news there, guys. That is it for us today. That is Thursday's April 23rd show. Where is Robbie? That is the question that we're all wondering. Where is Robbie? Guys, it is a beautiful day in New York. I'm going to get some sun. I'm going to go outside. We got some calls, but I've had fun today. And guys, I think DeFi is going to be all right. This looks the most promising thing that I've seen so far. I'm going to dig more into it. We'll have more information coverage on Twitter and on tomorrow's show. Ladies and gentlemen, we will see you tomorrow.